Hi, welcome to this video day, which is on the 12th of March. It's Monday, 6:30 p.m. GMT. We're just going to demonstrate a simple support and resistance trading strategy today. And we're going to be looking at two trade setups. They're going to be Euro USD and Euro JPY, which we both think have the potential to make 500 pips or more in profit. You'll see why when we go to the charts. Now, in terms of the strategy itself, very simple, just looking for big levels of support and resistance that matter to key players in the market. So we've got to find those key levels. We do that by using the COT, the Commitment of Traders report. If you don't know what it is, it's the best tool in Forex to complement your technical analysis. You can find more details on it and more info on a link to a video beneath this one. If you just want to watch the video through right now, just keep in mind that what we want to do is always trade with smart money commercial hedgers when their positions diverge away from speculators. Now, in relation to when we're doing the chart analysis, it is my view as of right now. It can obviously change in line with the market conditions. You can actually follow our daily technical analysis and levels on 12 major pairs on the link beneath this video. You can also get all our COT analysis and also our full trading techniques. It's live access and you get a 60-day risk-free trial. And just one point I would stress, in terms of trading strategies, my view is if you think a trading strategy should work, okay, a lot of people say their trading strategy should work, you should demonstrate it by giving your levels of entry, stop and target, and that is what we always do. Right, now what I'm going to do is start with Euro USD. We're going to look at the COT net traders data first.
So on the Euro USD, just look at the COT net traders positions on this chart before we move to another chart and draw our levels. But in terms of this chart for new viewers, we're just looking at commercials in red, the smart money hedgers, and seeing what they're doing against the large speculators. Now, the euro became interesting for us on this A arrow, where they go up to a historical net long extreme. They've never ever been as long in history. Commercials drop short against them. And you can see they buy it up into this A level, just below 126, just above, around the 125 level or above it. And prices just cannot get higher. We double top and we fall back. Now look at the movement in terms of speculators. They drop off their record net long, then they kind of drop off again, then they step up here, okay? So what you've got is they buy the dip, goes up to B, and then comes off. And you can see that was the week before last. This is this week. They're dropping off slightly. What does that mean? Well, for me, what it means is the speculators are just running out of buying power or optimism to push the euro higher, because you've got this level comes in as resistance, you get the drop, then we get up to here and drop back. So I personally think the odds favour a downside break. So let's go and draw some levels. We're on the Euro USD daily chart, and just before I draw my levels of entry, stop and target, just want to go through these fundamentals, because I think this is what the commercials are seeing and why they've gone so short against the speculators. The ECB not to reduce stimulus as fast as the market expects. Now, the market expects stimulus to end by September, and the ECB to raise rates by December. Now, the ECB have been very cautious. They were cautious in their meeting last week. Inflation is too low. It's not going to happen, okay? Even if it does, the market's discounting it. So this stimulus fundamental, which the market has seen as so important, which has really driven the euro higher, it's now discounted. And that is bearish for the euro. Also, interest rate differentials favour the USD currently and going forward. They do obviously favour the USD at present, but going forward, the market is just not seeing rates going up that quickly in the US. The Fed keeps saying they're going to be going up 3 times, probably 4 times. The market just isn't listening, doesn't believe it. They probably will go up 4 times. So that's again bullish for the USD. Risk off if we've got any problems with trade wars or the stock market. That's positive for the USD. Now, in terms of this chart, this is where the historical extreme is hit here, up into 125. Now, if you were just looking at this chart without knowing that, you wouldn't know that you were going to get a break to the downside. The COT helps you, okay, detect entries, based upon the sentiment. There's a lot of speculators long. There's probably not enough buying power to push her up, yeah? Now, in terms of our recent positions in the euro, we came back through this level after we made a new high, came in at 124.60. Actually, it did go quite nicely to the down center. Oh, sorry, to the downside even. But then she bounced back and took us out on stop. Minor profit, okay? But this rally up here, which we saw when we were looking at the COT net traders data, expected this to fail as well. You got 124 as a round number. All we did was sell after the ECB, okay? The red candle, if I can get that line straight, this red candle here is the ECB day. Which goes up, we just sell it back through 124. We thought the ECB would be bearish. She drops down. Now she's traveling sideways. She doesn't really drop much, okay? Now, from our perspective, if I draw a trajectory line, that 124 level is going to be very hard to take out, okay? In our view. So we're in at 123.60 and we've got a stop at 124.80 at the moment. And we're expecting a big move down. Now, if you're wanting to come into this trade, where would you come in? You'd obviously sell a rally back to 124 on weakness. The obvious technical level is here, in my view. Okay, because this is where we push up on the blue candle, find support, nearly touch back up. I do not think this level is going to hold this time around. I'll explain why in a moment. If I was coming in fresh, it'd be the bounce, or just simply through that tail there. Now, in terms of why I don't think this level will hold, is because what you've got is the buying is exhausted, okay? See, it goes up here, can't get through, comes back. This is another attempt. There's not enough buying there. And now what you're going to see, as the bullish sentiment peaks in the dollar, is stops get hit. And the speculative position is big. So I think if we come through here, get down towards here, the stops just run, okay? You have to monitor it as it goes, of course. But I would say, based upon the historical extreme, just on a stop it, that is easily achievable, 119.30. And it's also a weekly level here as well. I could draw it across a bit, actually. You can see it's just where we break up. There. If I get my line straight, there we go. So this is easily on the cards. And because it's so many specs long and the bullish fundamentals have peaked, you might now start to see sentiment get a little bit bearish towards the euro. We could go all the way down to 116. So, from 123 to 116, what's that? 700 pips. But to be honest, if you just got to the first target, that would offer a risk reward of over 3 to 1. Okay, and yes, the COT. When you look at the COT data in relation to the technicals, it changes your view of the charts. It really does help not only get entries, but also project ambitious targets. Right, that's our review of Euro USD. So we see how that one goes. Let's go and look at another interesting pair, which is going to be Euro right,
JPY.
On Euro JPY daily, there are no COT net traders positions for the crosses, but you can actually work them out yourself, which is what we do. We would take the two majors to make up the cross, Euro USD, USD JPY, work out what the speculators and commercials have got in both individual pairs, and then total them up to get the cross. And we do it as a ratio. Speculators we've got here is 5.1 to 1 in terms of their long positions over their shorts, which is pretty bullish. Commercials 3.5 to 1 in terms of shorts over longs, are pretty bearish. A divergence of 8.6 between the two groups, and speculators are stubbornly long despite this big fall down. Okay, now we like divergences above 10. They will normally indicate a move in favour of the commercials. I'm just going to discuss this one in a moment, but as the trend progresses, you expect the divergence to come down. This one hasn't come down that much at all, considering how far the euro has fallen, which points to a continuation of the downtrend and more stops to be hit by the speculators. I'm just going to go through how we've been playing this trade. Now up here, 136, you get divergence of plus 15, and that really attracts us, okay, because we're struggling to get through 136. We'll go short and she'll bounce and take us out. Okay, that does happen on the COT quite a bit, because what happens basically is you've got the commercials indicating a trend change. Okay, but it doesn't matter if the position runs against them 100 or 200 pips or so, because they're hedgers, they're not losing any money. But if you get stopped out, it normally doesn't bother you if you're using the COT, because you're using tight stop protection, and you'll normally get another bite of the cherry. And our position, our big one, came in through this level. Big blue candle breaks out. This candle looks unconvincing, looks a bit small, finishes off the highs. We'll just sell back through the two blue bodies. Down she comes, big red, okay? Back through 136. Also takes out the 20-day moving average. And when you expect a big trend, you're expecting the 20-day moving average to hold rallies and basically, for prices to fade back to it. So after this big red, you do get the blue come through it, and the red comes through it, but then we drop back. We don't get very far through the 20-day moving average. This candle's significant because pushes away from the 20, and you think, well, we thought that the stops would get run of speculators. You get quite a few stops run. You get all the way to 130, and then we start to base out. A little bit oversold in the short term. Our stop was tightened in behind 131. And then basically we get stopped out, okay? But you've banked 500 pips of profit, which easily makes up for the small loss that we took on the initial go at this one. So now, you corrected oversold and you come back to a 20-day moving average, and you've got a round number behind. Okay, just want to go through those two bodies there. So what you've got effectively is, here's the 132 level, poke to the 20, poke to the 20, poke to the 20, poke, poke, can't really get through it. Okay, so we now think that the euro is going to be coming down. Three tails that are all lower there. Now, if you wanted to come into this one, where would you come in? I would say through 130.70. Okay, stop well back from 132. Target 124. I'll tell you why I put the target there in a moment. But would these four candles here provide significant support? I don't think so, because we know there's still a big amount of specs to get run. So I think coming through this level will be okay. You've got your stop back here. If it gets to 124, which is the longer term target, that's a great risk to reward. We've had a nice move down already. We're going to get another one in our view. You do have some support at 128. Okay, you've got to manage the trade as it goes. So why have I got 124 as my target? Yeah, you can see here, rally on stimulus reduction, which we discussed a moment ago in terms of Euro USD. That's what pushed the euro all the way up. The stimulus story has peaked. Okay, speculators are still very long. The fundamentals, which I won't discuss here, but they have turned bullish for the yen. Okay, so euro, nice move down. There is more downside to come. That's what we think. We shall see what happens both Euro USD, Euro JPY. Obviously, it's my view right now. You can obviously follow these trades daily in our member centre if you wish to. Right, thanks so much for watching me as usual. Take care and have a good day.